If you've been eyeing Townsville as a potential investment location but don't know where to start, let me show you the top 5 suburbs in Townsville under 600,000 that are showing strong investment potential. My name is Gilbert. I'm a data analyst and a property investor, and I built a platform called SuburbsFinder to help investors shortcut the over 15,200 suburbs in Australia down to the ones that match your goals. Today, we're narrowing in on Townsville, and specifically the pockets where data signals are flashing green. Let's get into it. Before we break down the top suburbs, let me quickly show you why Townsville deserves your attention. Townsville has historically been viewed by investors as a high-risk, resource-dependent market, but that view doesn't hold up anymore. In recent years, the city has been steadily diversifying its economy, with large-scale investment going into infrastructure, health, education, and renewables. That shift is starting to show up in the numbers. Job stability is improving, migration trends have turned positive, and demand is beginning to flow into suburbs that were previously overlooked. I believe Townsville is now in the early stages of a genuine growth cycle. Yes, prices have increased significantly in the past year, up 177% year on year, and the median house price has crossed the 500K mark. But what often gets missed is context. Over the past 2 decades, the market saw a sharp boom, a long stagnation, then a modest recovery. What we're seeing now is renewed growth of a relatively low base compared to national averages. Add to that a vacancy rate under 0.6%, sub 4% unemployment rate, 4.8 GRP growth, and very low inventory levels. And what you have is a market where demand is consistently outpacing supply. So based on that insight, I've applied 5 key filters to all suburbs in Townsville to identify the best performing areas. These filters include vacancy rate below 2%, gross rental yield above 5%, 3-year growth trend showing upward momentum, median price under 600,000, sales days on market below 10. Now let me show you the 5 suburbs that met those criteria. Starting with Rasmussen. Rasmussen is a well-established suburb on the southern side of Townsville, with a median price of 495K. It is an affordable entry point for investors. It offers a gross rental yield of 5.04% and maintains a low vacancy rate of 1.39%, indicating stable rental demand. The suburb has seen strong price momentum with a 73.68% growth over the past 3 years. What stands out about Rasmussen is its family appeal. It's near multiple schools and is close to riverfront parklands, making it attractive to long-term renters. That said, Rasmussen includes areas close to the Ross River, which have historically had some exposure to flood risk. Understanding the zoning and checking updated flood overlays is important, especially for long-term asset protection and insurance considerations. It's also worth mentioning that while most of the suburb is quiet and family-friendly, there are certain clusters with high crime statistics. These areas may influence tenant quality and property desirability. So doing street-level due diligence, such as checking police data or talking to local agents, can help avoid underperforming micro-locations. Second on the list is Garbutt. Garbutt is an inner ring suburb positioned just west of the CBD and adjacent to the airport, with a median price of $500,000 and a gross yield of 5.3%. It's still accessible despite being so close to central Townsville. It has a very low vacancy rate of 1.25% and solid 3-year capital growth of 72.71%, which is a strong indicator of sustained demand from both buyers and renters. A tight rental market like this usually signals that well-priced properties don't stay vacant for long, reducing holding costs and vacancy risk for landlords. Consistent capital growth over several years also suggests the area is attracting long-term buyer interest and benefiting from broader uplift, whether through gentrification, increased infrastructure investment, or lifestyle appeal. For investors, this balance of yield and growth potential creates a more resilient investment case. The suburb is currently undergoing gentrification, with older homes being renovated or redeveloped. This change is driving increased interest from buyers and renters. While Garbutt has historically recorded high crime scores, it's important to recognize that this often reflects legacy data. We're seeing early signs of demographic shifts, and investors are already capitalizing on that upswing. Next up is Heatley. Heatley offers a strong mix of affordability and rental performance, with a median price of $472,500 and rental yields of 5.28%. It is one of the fastest moving markets on this list, with properties spending just 6 days on the market, an indicator of high buyer competition and pricing confidence. A fast-moving market like this typically means buyers are acting quickly, often with fewer discounting opportunities. That kind of urgency suggests that listings are well aligned with market demand, and investors can expect shorter selling periods, improved liquidity, and potentially stronger capital growth trajectories in the short to medium term. The suburb is characterized by its accessibility to local schools, shopping centers, and transport routes. It suits families and essential workers, which contributes to its consistent rental demand. Investors should note that parts of Heatley do have dated housing stock and slightly lower socio-economic indicators. But well-renovated properties in this area can perform strongly. Suburb number 4 is Vincent. Vincent is one of Townsville's more established residential suburbs, offering strong yields at 5.41% and a very competitive median house price of $466K. Vacancy rate remains low at 1.25%, and the area has posted a 66.43% price increase over 3 years, which suggests the suburb is benefiting from strong buyer demand and broader market uplift. For investors, this level of consistent capital growth means that property values are not just increasing in the short term, but are being supported by underlying fundamentals like infrastructure improvements, demographic shifts, or enhanced amenity value. It also indicates that buyers and developers see long-term potential in the area, which can translate into more competition, higher resale value, and a more attractive asset for financing or future sale. The suburb's appeal lies in its walkability and proximity to amenities. It has a solid rental base, and homes here are popular with both families and working professionals. While some areas include older public housing, there is increasing private ownership and refurbishment activity. Investors who focus on the better streets within Vincent are likely to see steady capital and rental returns. Finally, at number 5, Kelso rounds out the list with a median price of $495K and a gross yield of 5.15%. It shares the same low vacancy profile as Rasmussen, and while its growth rate over 3 years is slightly lower at 65%, it still represents strong momentum. Kelso sits further from the city center, but it offers river frontage and lifestyle appeal, so it's especially suited to renters looking for space, outdoor living, and a quieter environment. The key here is street-level analysis, because some areas in Kelso are tightly held, with limited turnover and consistent buyer interest, which can drive up values and offer a more stable rental base. These pockets often attract long-term tenants or owner-occupiers, and homes here tend to appreciate steadily. On the other hand, parts of Kelso are less in demand and may take longer to lease or resell, which can affect cash flow and capital growth outcomes. Investors who take the time to compare between these micro markets can position themselves to capture above-average returns while avoiding properties that underperform due to location-specific issues. If you want to keep tabs on when Townsville might be overheating or cooling off, here are the 3 metrics to watch. First, vacancy rate. Watch for sustained movement above 2%. Second, days on market, if it starts trending upwards over a few months. And third, inventory levels. A rise from 1.1 to 2.5 months could suggest a softening. If you found this helpful and you're actively looking to invest, SuburbsFinder is designed to help you run this kind of data-led analysis across Australia, not just Townsville. We've built it to help serious investors find suburbs with the right mix of yield, growth, and risk management without spending hundreds of hours in spreadsheets. I'll leave a link below for a free trial if you want to learn more. Otherwise, thanks for watching.